Good afternoon, guys. I hope you are well. Okay, cool. Yeah, it seems like everything is right. So welcome to the tutorial for general deductions, right? Today we'll be doing the general deductions formula. And like I always say, whenever you are doing a question, please always take notes of the mark and time allocation, right? That should be the first thing you take note of. Okay, yeah, I don't know. It's been giving me problems. I don't know, like, yeah. Okay, let me just use this instead. Open that in the meantime. Also open that. My laptop is a bit slow, I don't know why. Okay. Let me just quickly do this. Okay, cool. Okay, guys, welcome to the tutorial for general deductions. So whenever, like I've been saying, whenever you get a question like this, or in fact any question, the first thing you want to take note of is the mark and time allocation. This question doesn't specify the mark. Can you guys see properly on the screen, like what I'm highlighting is stuff? Okay, cool. The first thing to take note of is the mark allocation, and since you guys have 2 minutes per mark, so it means you should essentially take 50 minutes to do this question. That's very important because when you are in a test situation, you have to move on as soon as you run out of time for each question. And then second thing is you must give yourself purpose by essentially reading the required. For this question, you are required to discuss, right, whether Chile Cornwall will be allowed to deduct any of the above mentioned costs in terms of the general deduction formula, right? Section 11A of the Income Tax Act, and read together with Section 23 for the 2023 year of assessment, right? And then you are told to refer to relevant case law, in brackets, court cases, where necessary. So now you know what's required of you. You are required to discuss whether or not the above transactions will meet the general deduction formula, read together with Section 23 for the 2023 year of assessment, and then in your discussion, you must also apply relevant case law, right? So you must support your discussion with relevant case law. Let's quickly read then the scenario. It says you are a tax advisor at a local audit firm where you desperately want to impress the firm's partners with an eye on a future partnership offer. You receive the following email from some of the firm's partners requesting advice on the tax affairs of the client. And then you see it's an email, right? So please make it a practice, guys, that whenever, if in the scenario is written in the form of an email, memorandum or report, your response should also be an email, memorandum or report. Meaning, if you got an email, you cannot then write a business letter, you understand? You must write back via email, and you must literally write the email down, which I found weird when I was a student, but anyway. Right, so it says my client, Julie Cornwall. So we are dealing with Julie Cornwall. She is 36 years old, she's not married. The married stuff, you'll see, it becomes very relevant as we progress in the year, especially when we are dealing with individuals. You will have different tax consequences when someone is married compared to when someone is not married. And then also, you know, since you've done residency, that it's important to note whether a taxpayer is a resident or a non-resident. And Julie Cornwall, we are told that owns her own business known as Julie Trinkets as a sole proprietor. She imports royal memorabilia. So she deals with royal memorabilia from the United Kingdom, such as painted plates, flags, and pens, and sells them on the South African market. So she sells them in South Africa. In a question, guys, this is business. Like, you are learning about business in a way, but only the tax consequences of doing business in South Africa. It's very, very important to always note what that business or person does. In this case of a client called Ginny Cornwell, and she buys and sells royal memorabilia. This is not just for the carrying on of a trade aspect of the formula, but it's for every time you do a question. It's very, very, very important to know what the taxpayer you're dealing with does. It becomes easier to essentially identify the tax consequences for each transaction. Says, I'm a little uncertain about the tax deductibility of the following costs incurred by Geely during the 2023 year of assessment. And we are told that Geely is a registered VAT vendor and all amounts exclude VAT. So it means do not take into account VAT. Do not take it out because it's already not there for the 2023 year of assessment as per the required, right? And then we are told Geely spends a lot of money on advertising her products to the local market to keep them informed of the availability of the collectibles sold by her business. During the year, she spent the following amounts on advertising. So these amounts were spent on advertising. And we are told that a monthly advertisement is placed in a local magazine called Royalty Plus to keep customers informed. Geely pays 700 rands per month for this ad. Geely has paid all amounts. So she's paid all amounts in respect of the 2023 year of assessment in cash. Whenever you are doing a question, please make it a note. You always highlight an event which took place and the date on which it took place, right? So don't just highlight the date. Highlight what happened on that date, because you'll use that information to apply in your scenario, right? And then we are told Geely realized that the South African public has to be made more aware of her products and came up with a genius advertising scheme. She connected a local bus company and entered into a contract with them in terms of which she was allowed to paint 5 of their Johannesburg and Pretoria route buses in the colors of the British flag, together with pictures of the most prominent royal figures. She also painted her contact numbers, email address, and website address on the buses. The total cost of painting and obtaining the bus company's permission amounted to 88,000 rands. Obviously, amounts are very relevant for tax purposes because we calculate tax on amounts. The contract with the bus company was entered into on 11 January 2023, and the painting was done on 20 January 2023. Again, like I said, you want to highlight the date and the event which took place on that date. In this scenario, we're told she entered into a contract on 11 January, but the buses were painted on 20 January 2023, right? Of the total amount of 88,000 rands, we are told that 40,000 rands was still owed to the bus company on February 2023. This advertisement will remain on the bus for a period of 2 years. So this contract essentially is for a period of 2 years. And then we are told during February 2023, Geely traveled to London. So again, you note, on February 2023, she traveled to London to purchase merchandise in respect of the royal child, Princess Charlotte. The total cost of accommodation and other living expenses amounted to 45,000 rands. So accommodation and living expenses as a result of the trip were 45,000 rands. And we are told that Geely paid for all travel expenses with her credit card. So she paid. She decided to travel business class so as to be well rested and ready for business as soon as possible after her arrival in London. The cost of the flight tickets amounted to, so flight tickets, the item amounted to 60,000 rands, the amount, right? An economy class ticket would have cost 10,000 rands. So economy class ticket would have cost 10,000 rands. And then we are told Geely ended up purchasing the 250,000 rands worth of merchandise for cash. So she purchased 250,000 rands worth of merchandise cash. All of these products were transported to South Africa on the same flight as Geely when she returned to South Africa. Again, that's an important event, especially for accounting purposes, because that tells you that the risks of ownership of the merchandise have now essentially transferred from whoever the vendor was to Geely, because they were moved from England or the UK to South Africa, right? She will only sell these products starting on 29 April 2023. So that's when she starts to sell the products. After finishing her business, Geely stayed in London for another week for holiday purposes. She spent exactly half of the time in England for business purposes and the other half on the holiday. She stayed in the same hotel for the duration of her stay in London. Okay, let's quickly do the tax consequences of this scenario. Just to remind ourselves, we are discussing whether the above transactions will be deductible in terms of the general deduction formula, right, together with section 23 for the 2023 year of assessment, and we must use case law to justify our discussion. Okay, but just a quick thing, guys. I'm not sure if you guys are aware of this. Before we begin, just a very, very quick thing. Where is it? Remember, you're writing on 30 May, right? Your test 2. But I find that many people have probably not even gone over the scope document. Some people probably don't even know that there is a scope document, you know. So please take note of this, guys. For test 2, yeah, my computer is a bit slow. I don't know what's happening today. But yeah. For test 2, you do not need to do residency. You will not be assessed on residency, guys. So if there was like an item which was giving you sleepless nights because maybe it chowed you on test 1, it's not coming on test 2. So you can relax and focus on the more important stuff, which is gross income, special inclusions, and exempt income, right? General, special, and prohibited deductions will be tested, and for capital allowances, you'll only be tested up to where the lecturer ends before the test, right? If you didn't know this, take note this. The stuff which was tested on test 1 won't come back to haunt you in test 2. Focus now on essentially the newer things and go over the scope document so that you know where you are writing and things like that. And then if you are writing back 300 on the same day, then you'd have to come on campus and write Bill 200 first at 10 to 4, and you'll be done at 10 past 5, and then from then on, you go and write your back 300 at 5:30. It's life, guys, ne? Okay, let's quickly do the answer now. Let's answer the scenario. And when you're answering the scenario, guys, let me just.
I just wanted to confirm, so if they, already in the information they provide, they already give a format of let's say an email with this case, you have to respond back with an email.
Yes. So if it was a business letter, then you write back a business letter. Yeah. If there is no format and doesn't require you to write in any format, don't use a format. Don't use a format. We won't penalize you, but save time and don't use it.
So just making sure so
Yeah.
they didn't actually say use the email, but the information they gave.
Yeah, exactly. So it's implicit in the scenario that it's like, dude, when you get an email, how are you gonna respond to an email? You're gonna write back an email, right? Yeah, that's how it is. But if it's your friend, maybe you might text them back, right? So, but just to know, guys, we won't always tell you. He's right. We won't always tell you because it's not explicit in the question. But if the scenario is in the format of an email, then write back using an email. Okay, so the 1 mark you should always try and get is the presentation mark, right? Or the format mark. And this is 1 mark, guys. 1 is a mark. Out of the 25 marks you're writing for, you're already writing for 24 marks, right? And then the second thing is you want to note the theory. Theory or element of definition. And this is 0.5 marks, so mark. Right, and then the next thing you want to take note of is the relevant court case. Note there I said relevant court case, meaning not all court cases will be relevant. You need to identify the relevant one. Right, and this is also 0.5 marks, right? Then the relevant or correct court case principle. And this is also worth half a mark. And then guys, this means, I'm sure you are probably now overwhelmed with the court cases, right? This means when you are studying those court cases, don't be too invested in the story. The story is not that important. It's important to enable you to understand the court case, right? But it's not important in terms of scoring marks. You won't score marks because you know, okay, Latekhan South Africa in the 1940s, and he was this big guy. You know, you won't score marks. What you will score marks on is to know the relevant court case, which was derived from the Lategan court case, right? That's the only thing you need to stress about. And then you need to apply the scenario to the theory. This is where you score a bulk of your marks. It ranges from 0.5 to 1 mark per application. Then most importantly, at the end, you must conclude. And this is another free 1 mark. Just conclude. Even if your discussion is, the other classes have asked me to upload this document, so I'll upload it, guys, don't worry. I'll upload this thing together with this thing, and then, but now I just want to show you how it actually works, right? Okay, let's quickly apply our scenario. Remember, we are doing the general deduction formula. And yeah, for this topic, please befriend this document, because it will make life easier for you. This document that says summary of court cases, right? It's on ClickUp. There's also another one for gross income. If you attended the previous tutorials, you would know there's a court case mind map, which just the court case and the relevant text principle for that court case, so that you save time. Okay. Okay, I'll do the others when I'm doing them. Okay, so this is the general deduction formula, guys. And obviously you score half a mark for each of these elements. Half a mark, half a mark, half a mark. I think there are 7 in total, because the last one is section 23G. Because remember, it says they're right together with section 23. What that means is you must incorporate section 23G in your response. And what that section says is the amount must be laid out or expended for purposes of trade. And then you get 3.5 marks, because I think these are 7 in total. Okay, now let's apply our work. Remember, presentation, you would have written an email, right? And then now the theory or element of a definition, this is the theory. An amount is only deducted if there is the carrying on of a trade, if it is an expenditure or loss. If it is actually incurred, if it's in the production of income, if it's incurred during the year of assessment, if it's not of a capital nature, and most importantly, if it is laid out or expended for purposes of trade. So is 0.5 marks. Now let's apply the first one, right, in the carrying on of a trade. So remember, we said we have the theory, we've done the presentation email, we have the theory, the elements are listed here. And then now we must pick the relevant court case applicable to that element of the definition. So we quickly come here. Oh my God. Okay, so for in the carrying on of a trade, you'll see here. In the carrying on of a trade, there's only one court case, and that's beggars. People said it's an English surname, not Afrikaans, so beggars. And then the relevant court case here, or the relevant text principle here, is that the trade aspect is very important, since if no trade is being carried on, no expense will be deductible. But usually it's the part in bolded parts, right, or the bolded words. So even if you write that one says trade should be given a wide interpretation, that's the correct principle. But I like that one more, because it essentially, you know, tells us that if the taxpayer is not carrying on a trade, then you cannot deduct the amounts. Right. So we have the court case, and then we have the correct text principle, and then now we apply the scenario. And in our scenario, we have noted that Julie buys and sells royal memorabilia, right? Therefore, she is carrying on a trade, right? And that's it. You have the elements, 0.5 marks. You have the court case, 0.5 marks. You have the correct text principle, 0.5 marks. And you have applied the scenario, or applied the scenario to the theory to say that Julie buys and sells royal memorabilia, therefore she's carrying on a trade. So 0.5 to 1 mark. And then we quickly move on because we are done there. Now we apply the expenditure and or losses element. Right, again we go and look for the correct code case. So for expenditure and losses we have Yofe and we also have Labards, right? And then we move on to in the production. So there are only 2 code cases there. And then remember I said you only get marks if you identify the relevant code case as per the scenario, right? So for Yofe, the tax principle is that expenditure usually means a voluntary payment of money and loss is an involuntary deprivation, right? But then Labart says the allotment or issuing of shares in exchange for the acquisition. And if you read your scenario, you know that there was no allotment or issuing of shares. So it means Labart is irrelevant, and the relevant code case there is Yofe, because you must actually determine whether or not the amounts that are in the scenario are an expenditure or if they are a loss, right? So we quickly come here, we write our code case. By the way, guys, this is the same thing you will do for gross income, right? You follow the same formula. And then now we must apply our definition, right, to the scenario. Okay, let's come here. Okay, I'll ask you this. Is the monthly advertisement a voluntary payment or is it an involuntary deprivation of money? In other words, does she have a choice whether or not to advertise? She has, right? So it's a voluntary payment, therefore it's an expense, right? Not a loss. An example of a loss would be if you get into an accident and your car is written off, right? Did you willfully get into an accident? No, otherwise it would not be an accident, right? If it was, it's an accident. So it's an involuntary deprivation. You lost your car, it's written off, now you have to figure out a way to get a new car if you didn't even have insurance, you understand? So that's a loss. You didn't expend anything, you lost something, right? Also for the bus thing, she had a choice. She could have painted, she could have used a billboard, you know, instead of going to buses. Or she could have just done nothing. So that's also voluntary. So it's an expenditure. Again, for the trip to London, she could have stayed in South Africa, called the manufacturer of this royal memorabilia stuff and says, please send X and this or this type of items instead of going there. So it's voluntary. Also for the merchandise, you know, arguable there, but for merchandise, she can choose, like, okay, not to buy from a certain vendor, or she can even choose to be in a different business. Instead of selling memorabilia, she can sell different items, so it's voluntary, right? And also, yeah, I think that's about it. If also the accommodation and other living expenses, she can choose to just stay in South Africa and not go to England, and thus not incur the accommodation and other living expenses. So do you guys agree that all these transactions are expenditure and none of them is a loss, right? Because they are all voluntary payments. And then you quickly apply that. I would advise you, in a scenario, you show it differently maybe, or you essentially discuss each line item to increase your chances of getting marks. But for purposes of time, we can just sum it up and say all transactions are voluntary payments. Thus they are expenses. Something like that, right? And then we are done there. And then now we come to actually incurred, right? I hope there's no load shedding. Is there load shedding now? No, right? Yeah, yo, thank God. Okay, now we do actually incurred. Here is it. I'd advise you guys to please go over this document once, and then you can maybe create your own mind map by just writing the code case under the correct element, and you write only the court case and the correct text principle so that you don't have to reread this document again. But if even that's too much, because most of the text principles are just written in bold here, so you can just read the parts in bold when you want to quickly remind yourself. So for Edgar's stores, the text principle is this: before an expense can be deducted, it must be unconditional and not contingent. Meaning you must be required to pay, you must be obligated to pay if you have not paid. And National Purge says that if a payment is conditional on the happening of an event, then the expense is only actually incurred once the condition has been met. So we can quote both those. Okay, but let's go to Golden Dumps real quick. Golden Dumps says that if the outcome of a legal dispute is unresolved, and we know that in the scenario there was no legal dispute, so this court case, Golden Dumps, is irrelevant. And Labat, we already know, it talks about the issuing or allotment of shares, so it's also in exchange for an asset, I guess. That's also irrelevant. Then you know, okay, the only relevant court cases are essentially Edgar's and National Lepers, because they say that before an amount or an expense can be deducted, it must be unconditional and not contingent. So we can quickly come here and write this. And Edgar's. And we may write the text principles, right? And guys, you don't have to write the text principle as it is. You can summarize, right? These two things can be summarized. Essentially what it says that you can only deduct an amount that is unconditional, right? Or there's an unconditional legal obligation to pay that amount. That's what it means. Okay, so now let's quickly apply to our scenario. So let's quickly go to the monthly ads, right? In the scenario, we are told there that Julie has paid all amounts, and she was incurring 700 rands per month for these ads. So is that actually incurred? Has she actually incurred the amount if she paid? Yes, right, because she paid. And the ads were displayed on the magazine. So you can quickly go there and say this amount is actually incurred since Julie paid, right? Paid and the ads were placed. I don't know why I made that capital, but it's fine. And then we can quickly go to the bus ads. And I think this is what makes this question a little bit difficult, because you have to consider different transactions. But for the bus ads, they tell us that the contract with the bus company was entered to on 11 January 2023, and the buses were painted on 20 January 2023, and the contract amounted to 88,000 rands, but 40,000 rands was still owed on 28 February 2023. Is that amount actually incurred? Or which amount has been actually incurred? Has the 88,000 been actually incurred, or is it only the 48,000, since 40,000 is still owing? Anyone?
Since they already completed what was asked of them, I think the only part that's actually maybe uncertain is because the benefits carry on in the subsequent years.
Yes, of assessment. Thank you. Yes, he's right. The bus company has fulfilled their obligation as per the contract, because the buses have been painted on 20 January 2023. But before you even consider that, these people contracted for this thing on 11 January 2023. So there is an unconditional legal obligation to pay on the part of Julie, because if she does not pay, then the bus company can go to court and sue her for the full amount, because they've essentially fulfilled their full contractual obligation. Do you guys understand? So yeah, it is actually incurred. Because the buses were painted, okay, because Okay, actually you can write it this way. The full 88,000 rands has been because the buses have been painted and thus Geely is unconditionally obligated to pay the full contractual amount or contracted amount. And then, guys, we can quickly move on to the others, but I want to highlight something. For the accommodation and other living expenses, we are told she paid the 45,000 rands, and we are also told she stayed at the hotel. So it is actually incurred. Do you guys agree? It's irrelevant that she paid using a credit card because it means the hotel got their money and now she must sort out her affairs with the credit card company. You guys understand? So it is actually incurred. And then the flight tickets, she did fly, right? So that 60,000 rands, oh yeah, question. Is the 60,000 rands actually incurred or is the 10,000 rands actually incurred? Why?
It's still the market value, it's not excessive even if you didn't take the flight that we wanted you to take.
But guys, if she flew economy, she would have paid 10,000. Remember, SARS is losing out on money here. If she would have flown economy, 10,000 rands. She chose to be bougie because she wants to arrive there feeling fresh. She paid 60,000 rands, meaning 50,000 rands. She's claiming 50,000 rands more than she would have claimed had she flown economy. Which amount is actually incurred there? Do you guys agree with him that the 60,000 rands is actually incurred, or because she was bougie, we only kept her deduction to 10,000 rands? 60,000. And what's the reason? Taste is important. Okay. Okay, guys. This is the reason. Actually incurred. Let me write that down. For flight tickets. For flight tickets, actually incurred, right? Does not mean that an amount must be necessarily incurred. The necessary amount in that scenario was the 10,000 rands, right? That's what she needed to pay to get from point A to point B. But because she likes to fly in style, she chose to fly business class. But the definition for actually incurred, it means that in amount, it says that an amount does not have to be necessarily incurred. In other words, a taxpayer does not have to always choose the cheapest option. You are allowed to choose the most expensive option or any other option of your desire, and that amount will be actually incurred. You understand? So in this case, as you have correctly said, so the 60,000 rands is being actually incurred. Please don't, if you get this, don't get confused in a test, because sometimes getting multiple amount, okay, yeah, they're trying to correct me, it's fine. But you guys get the point. Any questions? Nothing, right? Okay, let's quickly move on.
So when would the amount be considered excessive? I also read that the excessive amounts would be excluded from deductions. When would it be considered excessive?
To be honest, I think as long as you've paid the amount, you should be allowed the deduction, right? The only thing in tax where you might be limited to deduct a certain amount, it's when a transaction maybe is between related companies, let's say a group of companies, and the market value of an item is 10,000 rands, but you inflate it so that the other company claims a higher deduction to essentially avoid paying taxes. Then it's those kind of activities, or transaction between family members, brothers, sisters, mother, child, father-child type of things, right? So between related parties mostly. But in terms of normal business, like in this case, you chose to fly business class and it was the market value, then it's not excessive. Yeah. Okay, for the trading stock, she paid, so it is actually incurred. Okay, now then we move on to in the production of income, right? Yeah? No, we did say the accommodation, the 45,000 rands is actually incurred because she paid. I just don't want to write it down to save time because I want to go and discuss in the production of income. Where is it? I don't know. If you heard me, I did say she did go to London, right? And she did stay in the accommodation and she paid 45,000 rands. It's irrelevant that she paid using a credit card. It is actually incurred. And also the trading stock is actually incurred because she paid the 250,000 rands cash. So it is actually incurred. But yeah, I'm running out of time. I want to quickly discuss in the production of income and yeah, quickly move on even from there. Okay, for in the production of income, again, the relevant court case there. Okay, no question. Oh yeah, this one. So in the production of income, that's the element. The first court case is Port Elizabeth Electric Tramway. I want you to know this. They tell you there, this is a leading case. What that means is you damn sure make sure that you know this case. You understand? Because it's a leading case. Most likely than not, if you have to discuss this element, you will have to apply the text principle from this court case. So you can lessen the load now and say, okay, the most important court case for this element is PE Electric Tramway. And it tells us that, it tells us that the expenses to be closely connected with the income end. This is called the closely connected test. There is no requirement that expenditure be necessarily incurred. Again, we've already discussed that part. One should ask oneself the question, was the expense an inevitable concomitant closely linked to the operations of the business? In other words, is this expense unavoidable? Which seems a little bit contradictory with the first definition for expense and losses, right? Because there it says an expense is voluntary, a loss is involuntary. But now we say, okay, if it's in the production of income, I guess maybe from that context, to produce income, is this an unavoidable expenditure? You can look at it from that perspective. For a business to generate income, is this expenditure unavoidable, right? And then for your firm told us that an expenditure is involuntary, is voluntary, and a loss is an involuntary deprivation. And then for BP South Africa, when a loan, you already know, okay, when it tells you there when a loan, there was no loan, so BP South Africa is irrelevant. And BPSA is very confusing. I think there is probably a subsidiary of BP South Africa. They tell you recurrent annual royalty payments. And you know, when you read the scenario, there was no mentioning of royalty payments, so that's irrelevant. And also this one, it says for provider, it says expenditure voluntarily incurred can qualify for a deduction if the purpose of the expenditure was to encourage a specific employee. There was no specific employee who was being encouraged here, so irrelevant. But yeah, the only relevant court case here, guys, is this one to save time. It's the PE Electric court case, and it tells us that so we can quickly come here and say PE Electric Tramway. And then it says an expense or loss must be an inevitable concomitant also linked to the operations of the business that is unavoidable. So we can quickly discuss these, guys, to save time. I won't write these down, but we'll discuss them and we'll agree. For a business to generate sales or to generate income, is it unavoidable that you have to advertise? Is there a way to sell without advertising? No, most likely than not. To the general public, not. Unless you have some secret contract with the government where you just enter a tender and you sell to them. But advertising is part of business. This is why, like, century-old companies like Coca-Cola, you are bound to see their ads almost on a daily, if not weekly basis, right? And after you've watched that Coke ad with happy people there drinking Coca-Colas, guess what's going to happen to you? You're going to be thirsty for a Coca-Cola, right? So it's kind of unavoidable. Do you guys agree? Same with the buses, it's advertisement. And then for Jilly, in order for her to source the best merchandise, is it unavoidable that she travels to London in order to be there and pick the items by herself, right? It's better to do business in person than over the phone, because at least in person you can see everything going around, you can assess the quality there. So it is unavoidable. The other alternative is she can just buy them over the phone, and when they come to South Africa, she's not happy with the quality, then she has to return them. So it is kind of unavoidable. You guys agree, right? And in order to generate sales, you must be selling something. Do you guys agree? Without trading stock, your business, unless you're a service provider, but even then you'll have to have consumables, which is trading stock. You guys agree, right? So all these expenses, do you guys agree with me that they are unavoidable? They are closely linked to the operations because they were spent to essentially generate income. Right, okay. Because I want to also cover this part now. During the year of assessment, very easy, guys. You look at the dates, all those dates, if you read the scenario, you'll realize they are within the 2023 year of assessment. So everything was incurred or happened, all amounts were incurred, wow, in the 2023 year of assessment. Quickly move on. And then let's discuss note of a capital nature, right? Because I don't want this touch to end before we get to this point, because this is a very important point. For note of a capital nature, right? They will tell you even there when you read that document, and even in the textbook, you will be told, okay. Okay, so for note of a capital nature, we are told that for new estate areas, the judgment sets out and discusses the main test. What this word should mean to you is this: most likely than not, you will have to apply the principle from new estate areas. Why? Because it contains the main test to determine whether or not an amount is capital in nature or revenue in nature, right? So this is one of the court cases also you have to know, new estate areas. And the principle says, we have to essentially, this test is called the operations versus structure test, right? So we have to determine whether an amount is part of the income earning operations or if it's part of the income earning structure of the business. So you have to determine whether the expenditure was incurred as part of the cost of performing the income earning operations or as part of the cost of establishing, improving, adding to the income earning structure. So that's the first test you have to do there. You have to say, okay, is it part of the income earning operations versus the structure. So income earning things are things like sales. You advertise, people see your products and they come and buy. Income earning structure is things like you buy a building so that you can own it for a number of years, you can house your merchandise in that building and people can come and do business within that building. So that's the structure of the business. But the activity is things like advertising, salaries, income earning structure. And then another test, if you are confused, you have to ask yourself, is this a once-off expenditure versus a recurring expenditure? If it's a recurring expenditure, salaries, advertising, in your case maybe Netflix subscription goes on every month, then that may indicate that it's revenue in nature because it doesn't create an enduring benefit. But if it's a once-off thing, you buy a building once, you buy a vehicle maybe once every 5 to 10 years, right? So that indicates that the item might be capital in nature. So let's quickly contrast that from the scenario. In the scenario, oh wow, the scenario. We have monthly advertisement, right? Like I said, this indicates this is a recurring expenditure because it's paid every month. Second of all, it's part of the income earning operations because when she advertises, it has a direct influence to sales, right? Maybe it contributes 0.35% to sales every time she advertises. It doesn't have to be a one-to-one contribution, right? So that's part of the income earning structure. And then the last thing in our test, you must ask yourself, does it create an enduring benefit? And it doesn't create an enduring benefit because why? If she doesn't advertise the next month, then guess what? When you get the magazine, you won't see her advert, so there's no enduring benefit. She has to constantly spend the amount. But in the case of buses, it's a once-off payment for 2 years, like he clearly noted there. He says the only questionable thing there is that 2-year thing. It's a once-off expenditure every 2 years in terms of the contract. It does create an enduring benefit because she only has to pay 88,000 rands once and then she'll get advertised for all the 2 years, right? So there's an enduring benefit there. And then, and it's part of the structure now. It's like having a billboard on the highway. Every time you pass there by Midrand, you see My Way with their pink insurance things there for I don't know how many years now. But is My Way still there on the highway? For people who travel from Joburg to PTA. Okay, maybe you guys are all based in Pretoria like I am. Okay, so the bus thing, that's capital in nature, right? And then the others are revenue in nature, as you can argue from based on the argument. But let's quickly do for the last part, guys, laid out for the purposes of trade. Let's quickly establish if she doesn't advertise, then the business only have income. So the advertisements were paid for purposes of trade. But the only questionable thing in the scenario is that we are told she spent exactly half of the time for business purposes in England, and the other half was spent for a holiday, meaning for pleasure, not business, right? And then in terms of the accommodation and living expenses, you'll argue that half of that bill is for business, but the other half is not deductible because it was not paid out for purposes of trade. Do you guys agree? Okay guys, and that concludes our tutorial, but before you leave, quickly sign the register. I'll zoom if it's a bit small. Oh yeah, guys, a note, residence, essentially the stuff you tested on test 1 is irrelevant for test 2. You can start to worry about it when you have to study for test 3. So for now, focus on the stuff mentioned on the scope document.